Hope my voice is audible. In case not, you can just write in a chat box. So I hope everyone is able to see me clearly and voice is visible also. Okay, so we start with our with our monthly market update. Our structure will remain the same. We'll discuss about global economy, then we discuss about US economy, followed by Indian economy and what's happening in India and other asset class. And lastly, we will go through our recommendation and what need to be done in current scenario. So the session will be roughly around 30 minutes and so. And whatever questions that you might be having, I will not take in between. You just drop me in my WhatsApp message. I will give it back to you. Okay, so we'll go with the flow right away. And currently, the stock market is going through a lot of volatility from the peak of 86,000 Sensex during the month of July. We are seeing market moving around 77,000 level, and Nifty is also 23,000 level right now. So a lot of investors are jittery that what exactly is happening. Market is going down for the last 6 months, and so how long it will go, how deeper, or what will be the turnaround time, and likewise, and so on and so forth. So a lot of questions in the investor's mind, and this question has typically arisen because from 2021 onwards, if you see the Sensex, if you see the stock index movement, it has been predominantly one-sided. Okay, from 2021 till date, uh, till July per se, the market has been one-sided, and this is the time that we are seeing correction for the first time in last 3 to 4 years. So a lot of investors who are into the market, they might be thinking what's happening. And I give you another data point, like post 2020, like 40% of the mark of the investors, of total Indian investors who are invested in stock market via mutual funds or direct shares, they came after 2020. So these sort of investors, they are not never seen the market downfall. Okay, so like we usually seen during the 2008 subprime crisis or during the COVID period also, these sort of investors have never seen the market downfall. So from 2020 one onwards, this movement has been quite evident, and that is the reason a lot of investors are panicking right now. Although the panic has not seen in the DII flow, but of late the investors are quite jittery, because myself managing the wealth management boutique firm, so I came to know and I hear a lot of questions about the market. So this session will be quite helpful in understanding what's happening in the market and what need to be done in the going ahead. So we move on with the presentation. So we'll go with the global economy first. So global economy, monetary easing with few exceptions. So if you see the advanced countries, rate hike, Japan is doing a rate hike, Norway and Australia has no change, Switzerland, US, UK, Sweden, Korea, Eurozone, New Zealand and Canada are in the rate hike, whereas emerging economy, India has no rate change hike, and rate hike we have seen in Brazil, and this is the rate cut happening in this country like Thailand, South Africa, Philippines, China and Indonesia. So that's what happening in the global economy front as far as the interest rate is concerned. I told you interest rate is one of the key factor which will drive the market in any conditions. So moving on, the global money supply is decreasing. Uh, Money supply in US billion, you can see the data from so in 2001 onwards. So money supply is decreasing, though why money supply has increased in 2020 and 2021, because about the COVID situations, a lot of subsidies and a lot of incentives the government has been given. So this money supply has been decreasing steadily over the years, which is a good term which will help you reduce the inflation. And as a result, you have seen the rate cuts happening in not many countries that you have seen in earlier slides. Fiscal consolidation, major economics. So that's a data point. You see the COVID point. I've shown it from the 2005 onwards till date. Now, general government fiscal deficit. This is the percentage of GDP number. Okay. So this is the number that I have shown it to you. US, Japan, and Eurozone. Okay. So that's a fiscal deficit numbers which I have shown. If you see the US is at the highest right now as far as the percentage of GDP of the of the fiscal deficit goes into consideration. Global PMI are still weak. So that's the data point of another point which I want to show it to you. 100 basis point of policy easing anticipated in 2025. So world policy, I'm talking about the world policy rate here, average policy rate here. So there has been a average 100 basis point, like 1% basis point policy rate reduction is expected in 2025. Okay, so that's what is going to be happen in days to come. Tariff hike can hit global growth. So you know that Trump has already said in his election manifesto that he will going to increase the tariffs. So post 20 January 20, when he will be taking up the government fully, and the policy parameters that he will be laying down towards the end of January or February beginning, he said that he will impose tariffs. So that will probably hit a global growth, but let's see what decision that is going to take. So earlier day, I was reading one article about US and Canada where the Trudeau government has said that because of Trump's statement of adding Canada into the US as a 51 state, he's actually diverting his attention from the tariff, because if US impose tariff on Canada, that will increase a lot of cost to the US citizen. So we have to wait whether Trump will go ahead with this tariff imposition fully or partially or whatever he wants to do. We have to wait till the Jan or February beginning. Okay, so real GDP loss. So I've given you a glimpse about the data points about what tariff hike can hit the global growth as such. Sharp rise in trade policy uncertainty, that's there. Top global risk in 2025. So understand this. This is the main important risk factor that will remain. One is the HMPV virus, which we all know about, but it is not likely to have a bigger impact because China has said that is not as big as the COVID situation. India also, there are a couple of cases come up, but it has not been contained. So climate change, that will remain not only 2025, but throughout the coming years. Geopolitical instability, again, that is going to remain as far as the aspirations of different countries will be there. Cybercrime and identity theft, that is also going to remain. It is not identical to the 2025. Security threats, terrorism, AI and automation risk, social unrest and civil war, loss of natural resource risk, energy risk, financial instability, chemical wars. So these are all 10 global risks which I have mentioned right now. It is not only for the 2025. I think this is for the years to come. If you see all these 10 points, that are going to stay for years to come. Okay, and we have seen this risk not only in 2025 but earlier year also. We have, for the last 15, 20 or many years, this risk has already been there, and despite that, we know in the last 20 years where this market has moved on. So this risk will remain, and some way or the other you might be worrying about any of this kind of risk if you take in carefully. But if you see the last 20 years, can you tell me any of the risk was not there? It was there. Okay, so it will remain as such. Housing market weak in China. China of late, there has been a huge fund flow of towards the China. You know that the Indian market, when you see the data, you will understand a lot of FIs are moving out of India. They're going where they're going. Predominantly, they are sitting on a cash, and somehow they went to China also, because China are looking very attractive right now. So their price to earning as per the index goes is very, very cheaper than as compared to India. So housing market, although it is started weak in China. So if you see the Chinese property floor space of house newly started, so you see that the market is cheaper, is getting weak because of the reason of huge demand supply mismatch. Okay, so that's the status of China housing market. China's debt burden is higher than the US and Eurozone. Now, that's a data point. Okay, so we are going by the data point itself. China's debt is higher than the US and Eurozone. So if you see the China's debt, which is higher than a percentage of GDP than the US and Eurozone. So that's a bigger point. China achieving leadership in key technology. Now, this is another interesting aspect. So if you see, China has achieved a global leadership within 5 key technologies. See, unmanned aerial vehicles, solar panel, graphene, high-speed rail. So these are the parameters where China is already becoming a global leaders. Okay, so these are a couple of things where they're lagging behind. So that is an interesting transition of power politics in the global market. World prediction for 2025 average global temperature will increase. So that's a negative point. Price will increase faster than income. It's a neutral. AI will replace many jobs in my country in 2025. It's a plus one positive impact. Uh, Positive or negative, I don't know, but that's a reality. Many more people will live their lives in virtual world. It's a neutral. There will be new major global pandemic caused by the new virus. One point negative. What is meant by negative is that expectation. Okay, people in my country will become more tolerant of each other. So that's a positive sign. 2% people say, lower say this year that no, it will be more tolerant. War in Ukraine will end, so -4% has said, and conflict in the Middle East will end in 2025. So that's a neutral point. So that's a prediction for 2025 as far as the survey conducted in different countries. Okay. So that's what happening in the global economy. So what we have seen as a summary of a global economy is that interest rate are going to be reduced in many countries, and 1%, 100 basis point, there is 1% rate cut expected. China is, although the housing is weak, but it is getting major power over different key areas. China's debt to GDP is also increased than US and Eurozone. And what we have seen, that the risk factor, the global risk factor, which remains, it will remain throughout 2025 as well. And a couple of important key parameters which we have seen as per the recent survey shows that it will not be as high as we have seen earlier year. Okay, so like new epidemic, global job cuts and everything, it will not remain as high as the earlier year. So it will remain more of a neutral or 1 or 2% negative kind of thing. So that's what happening in a global thing. So one interesting aspect which we have find from the global thing is that the interest rate is expected to go down because the money supply has been reducing. Okay, so that's one positive aspect that we are getting. Now let's focus on the what happening in the US economy. Now, Fed since 2021, January 2021, inflation is transitory. December, inflation is not transitory. So, if you see that recession is needed to lower inflation, so there has been a constant movements in the Fed since 2021. Economy is strong, and we are not in a hurry to cut rates. Now, what happening today is that so if you see the data point, like in September 2023, they said we need a 50 basis point cut to avoid recession. In July 24, the rate cuts are not needed yet. So the Fed has been quite doldrums over the last 2 to 3 years. Now they are saying we are strong and not in a hurry to rate cuts. But if you see the data going ahead, you will find the situation is not that great. Fed is maintaining a very delicate balance between growth and inflation. Key risk, twine deficit, rising twine deficit in US. If you see the current account deficit, that is a spike to 4.2%. Okay, that's a huge, like we used to see that current account deficit number in India itself. Now US is also having that thing. Fiscal deficit at 6.4%. So that's a huge. You remember, we used to have this data point in India, high fiscal deficit, high CAD. So that is what happening in US right now. US national debt surpasses 36 trillion. So that's the data point. US national debt per citizen is 1,06,818 dollar per citizen. Okay, so that's a huge numbers what you're saying. Now when you see this data point and we say that okay, so we are not going to reduce the interest rate, so that's a quite different of what exactly the data is saying. But anyway, they have their own thought process as such. But we will going to know more details about it once the Trump takes into the office, and towards the Jan end and February beginning we'll able to understand that. And that is one of the reason, guys. The FIs are pulling out money not only from India, they're pulling out money. When you see the data, you will understand they're pulling out money from China also, Taiwan also. Although they have invested some money in China, but again, they have started reversing that trend because China's stock market was 21,000 and they have suddenly come back to 19,000, like 10%, 15% down. So that is again because of the FI pulling out money. So FI is pulling out money across the globe. And because of this important factor that what Trump will take decisions post his taking office. So there is a lot of ambiguity out there. So once they understand that what will be the policy parameter, whatever he has said during this campaign trial, whether he will execute those or not, so that is one of the reason that they are pulling out money, and there's most of the FIR sitting on cash. Okay, so there has been a huge amount of FIR which have pulled out money from India and other places also, and that's why we have seen that market has corrected a lot for that thing. And they're waiting for the Trump decisions to take what exactly they're going to take in days to come. Lower rates are needed to service higher debts. So that's why I'm saying, this is the important data. Like lower rates are needed to service higher debts. You understand? I told you, U.S. national debt surpasses 36 trillion. So that's a huge amount of debt. So when you have debts, what exactly happened that you have to pay a lot of interest. So that's why I'm saying lower rates are needed. When I say this thing, and you see the data point here, economy is strong and we are not ready to cut rates. So Fed are in a doldrum situation what they're going to do from now on. But I think that the Trump taking over will takes a lot of policy clarity from there on itself. Otherwise, this ambiguity, and this is the ambiguity, that is the reason why FI are not putting investing, and they prefer to sit on cash right now. Okay, so that's you understand what's happening in the global market and why the FI are pulling out money from as such. Falling Fed rate cut, rising higher yields, inflationary impact on tariff policy to decide Fed rate action in 2025. So again, the tariff policies which will definitely come across, once the Trump is taking in the policy and all. So US is changing. America first, allies not aligned, an enemy. Cut bureaucracy, reduce inefficiency. These are all actually Trump manifesto. Tariff, deregulation, tax cut, delusion ECA, will war in Europe and Middle East and no one in Asia will be added, Fed rate cuts under pressure to keep high. So that's what we are saying, that we're waiting for the Trump takeover and give a policy clarity as such. US makes up 74th MSI World Index. So that's what happening in US. So in a summary, I can say that the US situation is not very looks good because they are in a high debts. They need to rate cuts. The Fed is also saying that, but Fed is not saying that thing. But the data saying that they need to rate cuts because they have to service their high debts. So, and secondly, we are seeing that they will be thinking about imposing tariff. So that's a very strange thing. They're thinking of imposing tariff, which will actually eventually increase the cost. And if the cost increases, they cannot rate cuts. So that is why there are a lot of ambiguity there in US, and that's why we need to see what exact policy decisions the Trump government is going to take post taking over in January 20. Okay, so that's what is happening in US. So they're in a crisis, and of late they have this LA wildfire happen. That's a huge wildfire that has happened there, and a huge amount of rebuilding exercise that they need to do there itself. Okay, so that again a huge amount of investments that they will be doing there. So moving on to India, our dark clouds gathering. So you remember this data point when we are saying last month, we say that India is an oasis in the world desert. So if you are attending my sessions regularly, now what we are saying that our dark clouds gathering. Let's see. Now headlines: third quarter advance tax collection rise to 16.8%. Understand what I say, okay? Advanced tax collection rise to 16.8%. Now, when the tax collection rise, because there is an income happening. Secondly, India's service activity rises to 4-month high of 59 point. Just a minute. India's service activity rise to 4-month high of 59.3 in December 2024. Manufacturing PMI dips to a 12-month low of 56.4 in December. Okay. India's retail inflation eases to 5.48% in November for 6.21% in October as food price moderate. Indian retail inflation eases to 5.4%. So that's an important data point. So it has eases to 5.48%. Indian wholesale inflation eases to 1.89%. Net formal job under EPFO dipped to 5 months low in October. So that's the data headlines of India. India's strong growth and stable macro makes it stand out. So if you see the data point, there's CY 1323, CY 2328. So if you see the real GDP growth across major economics. Okay, so if you see the India data point out here itself, so the light blue line is for the CY 2328. So if you see the data point here, across the countries of different countries, you will see the India stand apart from all countries here on. Economic activity shows growth, stand up sustaining. Capacity utilization likely to pick up in CY 2025. Kharif production to grow at 5.7%. Okay, so if you see all the crops I have already mentioned out here, this is a 2024, this is a 2023 data point. If you see, there has been a YOY increase bearing sugarcane and cotton. Okay, moving on, better monsoon bodies well for Indian economy. They are predicting to have a better monsoon this 2025. Rural demand continue to outpace urban demand. So this is the QY 2024, 25 and prediction. So this rural demand is continue to outpace the urban demand. Oil price remains subdued, CAD remain benign. Now, this is an important data point. A lot of people have been saying that what happening in the crude. If you see the crude price here at 74.68, okay, and our CAD, that is current account deficit. I told you that I show you the US numbers, the current account deficit and fiscal deficit is increasing, but our current account deficit has been very, very benign. And I don't know how many of you follow the macroeconomics. We have a positive current account deficit couple of months before. Okay, so the crude price has been constant during this time. Now, remember, I told you that rupees are depreciating vis-a-vis the US dollar. Okay, now still the crude price is remain same. Why? Because we are taking crude right now from Russia, and the transaction is happening basically not in dollar in case of rupees, and that is the reason the crude price had not gone high, and that is the reason in the earlier slide I show you that Indian retail inflation as well as wholesale inflation has come down because of the crude factor which the government has taken initiative taken, that they will transact crude like oil from the Russia and other state, and they will transact via rupees, not in dollar. And that has become a huge impact in our current account deficit and a fiscal deficit factor, as well as the maintaining crude price in the level which we are comfortable about. So this is a very important point, and that's why our inflation rates are lower than most of the countries and is lower than earlier estimate also. Indian GDP slipped to 7-quarter low of 5.4% in Q2 FY. So that's a September quarter. I expect the October, November, December quarter to be higher side, because in September quarter, what happened is that a lot of investments, public investment, government investment not take place because a couple of elections happen, and the policy parameters do not restrict that time to take any steps towards public welfare, because in election month you cannot do investments as such. So but in October, November, December, you will find a lot of investment out there, a lot of return out there, because we have a huge Diwali month, we have a huge festive month, we have wedding season out there. So I expect the numbers will come up better in October, November, December quarter, when you see the numbers in January and February. Only one company's number has come up, which is a TCS, which are giving 16.8% growth. Reliance Industries, we are expecting the quarterly result come up in next 10-12 days, and so on and so forth. And a lot of companies will have come up probably post 15th of January, and you will see the end of the January and the beginning of the February, a lot of companies' quarterly results start coming up. And that is one of the another factor why you don't see the market is moving up. Market is quite stagnant or going down. I told you, because if I are pulling out money, and it is stagnant. Why? Because they don't know, because last 2 quarter, you see the last 2 quarter market has gone down. Okay, so people, the investors are expecting market to come up, because this number has to come up, the results, quarter results. Now, but it has to come up in numbers. Only expectation. So they are waiting for this turnaround to happen, and quarterly results, different companies' quarterly results to happen. So that is one of the reasons they are taking a time out, and that is the reason you see the market is not moving up. So there are a couple of points which I already told you. One is the US factor. Second is the policy factor which Trump will take. Second is the quarterly results which you are expecting in the Jan end and February kind of thing. Once they start coming up, you will see the kind of rallies that this market will going to happen. Which way the rally will happen entirely depend upon the quarterly results. Okay, ultimately the price of the stocks has to be with the valuation, sync with the valuations. Okay, so moving on. Subdued growth in Q2 FY 2025. So these are all September data, because October, November, December data point has not come yet. Probably in the month of February, when we are going to take sessions, you will have the quarterly data and you will be able to see the numbers. So Moving on, festive plus wedding, I already told you that's a huge amount of sales that is happening. Diwali 2024 saw e-commerce sales surge by 49%. Okay, wedding does 4.8 million couples, sparked 5.9 trillion economic surge. So that's what happening in the last quarter. So I expect these numbers would reflect in the corporate results also. GST collection lower than estimated nominal GDP. So that's the lower than expected numbers. Okay. GST growth mirrored the slowdown in GDP growth. Indian Inc. strong free cash flow and healthy balance sheet. So I told you that number is already there. India Inc. capex slows down marginally to 9.4 trillion in FY 2024. Urban consumption shows sign of weakness. I told you that the rural consumption is increasing, urban consumption is decreasing. So that's what happening in India as a such. So what we have seen in India, although the last quarter result has not come out fully, so we are not able to show you that this October, November, December quarter results. But as far as the September quarter results comes in, we see the GDP number has come down, and we are expecting the numbers to be reversed by seeing a 49% surge in e-commerce sales, by seeing a huge amount of wedding, and $5.9 trillion revolve around the economy during that time because of wedding season. And we are expecting the monsoon will remain the same. We are seeing that the rural consumption has increased as well as the urban consumptions. Otherwise, all the data point which you have shown earlier, the inflation has come down. All the data point which you have shown earlier is favorable to India. So dark cloud, well, we can't say India's dark cloud is coming, but yes, we have to wait for the quarterly results to come on. Whether it will meet expectation or not, that we have to see. Because market has correction for 12 to 13% from its peak. Okay, from 86,000 Sensex to 77,000 level. So you can see that 12 to 14% market has corrected. Now the expectations of the quarterly results will have to match up for the market to move from here itself. Okay, so that we have to wait for there. Now let's see what is happening in the Indian equity market as such. Market capitalization to GDP ratio at all-time high. So if you see the market capitalization to GDP ratio, it is all-time high still. Okay, so an average is around 85, 80, 85, but it is still much higher. Market cap and profit after tax both are on high. So that's a good point. If you see the market capitalization as well as the profit after tax, both are at high. Valuation at premium to historical average. So this is important data point. If you see the Nifty price earning, average is 18.6. Now it is 19.9. Now this data point has reduced. If you see, this data point has reduced from there because of the market getting corrected. This data point has reduced. This is of 31st December. So it has corrected a little bit more also. So large cap is 7% premium to historical average. Small cap, if you see, it is still not coming down as such. It is 45% premium, and mid cap is at 29% premium. So small cap, you have to be very, very careful in investing going ahead. You know why the small cap is not coming down? If you see the data in the last 6 months, the Nifty, this data is exactly reflecting that. The Nifty means the large cap company, they have come down. Reliance Industries share price, like it was like 1600 level in July. Now it has come down to 1250 rupees. So it has fallen to like near about 20-25%. Whereas if you see the small cap, bearing few, the lot many are not corrected. The reason why, if you see the mutual fund portfolio, if you see the mutual fund SIP, there are huge amount of SIP books are going into the small and mid cap segment. And these SIP numbers has not come down. Although the valuation are high, it is clearly saying 45% premium valuation on an average Nifty index, a small cap index. But due to the huge inflow of SIPs are coming up into that sector, the valuation is still high. I give you a small example. Now, when I'm mentioning any stock or any mutual fund, don't take it as a suggestion from my side. This is a normal presentation. If you want to invest or to do consult with me separately. So these I'm going for reference as such. So if I tell you to give you a small example, why small cap I'm very cautious. Nippon small cap market total asset under management is 64,000 crore. You know, now that is a huge number. A lot of AMC will not be having that much of crore asset also. So now what exactly is a small cap? Now any company which is beyond 250 companies, top market cap is a small cap. Now in Nippon small cap, if you see, there are like 150 total companies into that mutual fund. Now 64,000 crore AUM that they are managing in that thing. Now how much valuation, how much market capitalization normally a small cap will have, like 10,000 crore, 5,000 crore, 50,000 crore, and out of that 10,000 crore, like 1,400, 1,500 crore is investing via Nippon small cap itself. So you understand what I mean to say. Now if there is a panic into the small cap, they will not be able to sell off those things also, because out of 10,000 crore, 1,500 crore is from Nippon small cap itself that are coming up. So that's why I am saying that it's become so huge. Even some of the large cap companies, large cap funds are not like that thing itself. So if you are investing in small cap, be a little bit of cautious, because the liquidity will not be there if the panic sell happen from there onwards. Okay, because as I see, what we are seeing currently is that the valuations is steep. Okay, in small cap and mid cap is steep. Large cap is exactly poised. 7% premium is absolutely great. Why? Because of lot of FIIs are pulling out money. Remember, FII do not invest in small and mid cap. They invest normally in a large cap. And I told you why FII are pulling out of money, because there's a policy uncertainty and after what will Trump will happen. So post Trump taking over, probably in the January end or February beginning, when he start telling about his policies parameter, things will be much clearer. The FII will come back to India as such. And we have a budget session coming up in February end. So whether the FII will come back to India not depend upon what budget the government is going to take. Okay, so there has been government say that. So when we talk about the liquidity, last one also talked, India is having a lot of liquidity, but we are showing a little bit of cash crunch, liquidity crunch right now. Government is saying that they are probably not going to do anything with the tax rate right now. Okay, but what they are saying, because of the inflation easing up, which I've told you earlier, the government probably might reduce the interest rate. That will again pump up more liquidity into the market. But again, that's going to happen during the budget session itself. So all these things, whether it will fall in place, whether the US policy decision will be aligned to the Indian budgetary decisions. So when this thing collide, then actually the FII will again come back and market sentiments will get boost, coupled with last quarter results. So these are the 3-4 things that you need to look after, whether the market will pick up, move up from here itself again or not. Otherwise, I am seeing till the month of March end, market will be volatile. It can go 5% down from here itself for all the reason, but not very deep, because I have shown you the Indian numbers. Numbers are looking very great. But these are some policy parameters, short-term policy parameters, which can impact the market as such. Okay, so till March, you will see a market volatility. Whether today is a bottom, we don't know. We can expect 5%. That is very rational thinking from here itself. From deeper from here itself, 22,000 Nifty level or 73,000 Sensex level could be quite well off. I have been telling this thing for the couple of months now, that 75,000 level is what I am expecting the Nifty Sensex should be there. So these parameters all come into place, and as such, so small cap, if you are investing, you have to be very careful about it, because it's already 45% premium, and if it falls down, then it is difficult. It will go like rampage kind of thing. Whether you look for a large cap company to invest in right now, because they are at very attractive position. And remember, when the FII come back, they will come back in global scenario where they will go apart from India. They will come back and they will put forth in the small cap itself. So moving on, I've told you a lot of things in this particular slides. So earning expected to remain robust. Will market not follow? So this is a data point. I told you earning is expected to remain robust. So I told you whether the earning expectation will meet the actual numbers, that the results will come in the quarterly results. So that's why I'm saying, if the results started coming up well, like TCS has given, then you will see the market again started moving up. But cautious, budget and US policy, this has to be aligned. So next 2 to 3 months, do not expect the market to move up massively from here itself. It will be range bound in these two things. post March, you can see some direction happening here itself. Nifty earning expected to grow at 6% in Q3 FY 2025. Okay, so this is the different sales growth number, EBITDA number, and PAT number of different companies, different, not companies, sector I have mentioned it about. Okay, so I've just quickly moved through, not going through exactly details. I talk about the Nifty. You see the sales growth of 5%, year on year, and you have the EBITDA number of 8.6% and PAT growth of 10.6% is a pretty decent. Profit after tax growth of 10% year on year is a pretty decent number for a Nifty companies. Earning remained in line with the normal GDP. So fund mobilization, public market remains strong. So this is the IPOs in last couple of, the last 2024, we have a highest number of IPOs. And so that will happen in the 2025 also. Okay. DIF flow at all-time high, so that will be there itself. Indian underperform key global market but outperform emerging market in CY 2024. So that's what we are seeing. This is the India, and India underperform key global market. So couple of global market, this is the performance, and this is the emerging market performance. Okay. FPI outflow is large but not substantial. This is the FPI outflow that I'm talking about. December currently ongoing FPI outflow in billion 11.8. So this is still not great, but outflow is still there. Now, another interesting data point here is that whenever there is an FPI outflow, from peak it go down to this, but from next 12 months the market has moved up there. Now from here the market BSE 500 index has go down 8%. Probably it will go to another 2 to 3% from here itself. BSE 500 index I'm talking about. But from there, in the next 12 months, you see every time it has bounced back sharply. So what I mean to say that we are sitting at January 2025, probably till March or April, exact precise date, we cannot say. Market will go down because of this factor which I told you. But from the next 12 months, we have to see a substantial growth. Remember, in the last 6 months, we have seen a market correction happening of 12 to 14%. Like if I tell you that market will give you a return of 12 to 15% in a long range, this 12 to 14% which we have come down, will actually have to be substantiated. So probably after this mad rush, downward rush stops, you can see a huge growth which you have seen earlier time also. I've seen a historical data for the last 15 years. Oil and gas, auto and power lead to FII outflow in December 2024. So that's a sector-wise FII downflow I've mentioned out here. Where will you invest? Okay, so that's the thing. Where will you invest? The PE level, I'm talking about the PE level, PE ratio of CY 2024, that is level this, and this is the Nifty level right now. I'm talking about the Nifty level. If you can see the PE ratio, slightly higher than its 10-year average PE. So we are a little costly, still in the costly level. So if you see the EPS, but the EPS is already high, earning per share. So and EPS growth in last 10 decade is a huge 161%, right? So that's what we mean to say by here itself. So despite we are having a high P ratio right now, if you see this thing, this 3 number data point out here as of December, the S&P 500, Nifty index, and CSI 300 index, you see the comparative analysis of all this market. That's why I'm saying India looks costly, but you see the EPS and the EPS growth in last 10 decades, it's huge. That actually justified the cost out here itself. Many stocks are delivered return. Quickly move on stock. Many stock are trading at expensive valuation. That's what I'm telling you. The many stock which are at expensive valuation. So before investing, just carefully, if you're investing in stock, whether I will recommend you to hold for till the March before going aggressively on investing. Probably March, April kind of thing. Once the policy parameters, once the budgetary things, once the quarterly results comes on, let the valuations get corrected to a rational level where you can re-enter right now. Okay. Moderate return expectations significantly. So that's the different sector performance I have mentioned out here. Be ready for volatility. I told you about this already before. Now we are overweight on large cap, so definitely be underweight in small cap, because although it has performed, because there's been quite a heavy amount of inflow coming for a mutual fund SIP. Out of total SIP, there are 40-45% coming into the total small cap segment itself, which is quite strange, and that clearly shows that people invest purely basis on the past performance, which should not be. Okay, so be heavyweight on a large cap instead. You will see the large cap, a lot of companies are corrected decently over the period. I told you about Reliance Industries. Now that doesn't mean you go and invest in Reliance Industries. Just to give you an example for that thing. Okay. So equity investment opportunities, I told you, like from next 3 to 4 months till March and April, market will remain volatile. So be a little bit cautious. Don't invest aggressively right now. Wait for the correction happening. Wait for the US Indian budgetary, the quarterly results, as well as the valuations, and then you can actually invest. If you really want to invest right now via mutual funds, go into a STP mode. That will be better. On invest in a bond and then go via daily investing into via STP, which will actually take care of the volatility and will get a better pricing. If you want to invest in stock, so do not invest in stock aggressively at one go. Instead, invest daily. So there are options in your demat where you can invest daily only in the large cap segment. Okay, the segment which has been corrected well and a good corporate governance company. So you can discuss with me offline about those parameters, those companies' investment options out here. Okay, so debt market outlook, just really quickly go throughout the is inflation stays firm. If cut rate indicates fewer reduction ahead. INR showed greater resilience against USD. I just quickly go through about this, which I've already mentioned a lot about earlier also. Heavy inflow in Indian bond post inclusion in the global bond index. So if you see the global bond index, Indian inflow in a global bond has increased, whereas the outflow of Indian equity market has increased. Indian CPI inflation eases at food price moderate. I already told you about this thing. So CPI inflation has eases out. RBI actively managing liquidity, invest in duration. So if you are willing to invest right now, I told you that the inflation number has come down. So invest in a duration. What will happen in duration? Like long duration government bonds paper. Now, if you're going to invest in long duration bond paper, we expect the interest rate to cut out in India. If the interest rate cut, the bond yields work inversely, so that you will get a better yield to maturity or mark to market movements as such. So invest in duration, a longer duration bond paper right now if you are going for a fixed income market. Debt market, already told you, invest in a long duration bond paper. Like gold has given a phenomenal return in 2024, and it is the top performing asset class in 2024. Whether it will remain in 2025, the reason why gold is showing is that this gold outperform all major asset class in 20. So that's I told you earlier. Okay, so all outperform asset class in 2024. Why? Because central bank gold demand surged fivefold since the freezing of Russia's central bank assets. So because of freezing of Russia's central bank assets, so a lot of companies, lot of countries are accumulating gold as such, and as a result, the gold demand has increased. Okay. China's November net gold imports via Hong Kong a 7-month high. So this is the numbers. Fed falling rate support gold price. Okay, so that's what happening in the debt market as well as the gold market. I told you gold has been a phenomenal return in 2024. Whether it will remain in 2025, well, because of equity market remain volatile, gold market will be there. But always remember, asset class performance never remains static every year. It keep on changing. Winners always keep on changing. This last year it was gold. Last to last year it was S&P 500. That before that 2022 it was commodities which has given the highest return. Before that Nifty has given. So every year you will find different index or different asset class performing well. So you will not have a same asset class performing well every year. So that's why I'm saying do not see the past performance while investing in any asset class. Okay, you have to see what happened in future. Gold should be invested as a strategic mode, not as an investment asset class. Again, I repeat, I already told you earlier, if you have 100 rupees in your kitty, invest 10% mandatory to gold or silver. and irrespective of its price going high and lower as such. But gold, given 27% in 1 year, I expect the market to, it has to be corrected. Okay, so just because that the countries are buying gold aggressively, that doesn't mean that the fund price will go up, because it does not have is the gold price increase because of the demand and supply kind of thing. Okay, so gold, do not, because last year it has gone high, do not aggressively invest in that thing. Instead, go aggressive stance about strategic investment. Okay, so for the investment parameter, I will personally tell you that for the next 2 to 3 months, you can invest in stocks, not aggressively, but every day via STP or via stocks if you're buying in a daily mode kind of thing. Preferably stay in cash, because once they settle down, I told you the next 12 months it will going to be massive high. So we don't know when this settling down will happen exactly, at 77 or 23,000 Nifty or at 22,000. But 5 to 7% correction is very, very expert. 5% correction should happen, like from there. I was telling you the 75,000 level has to be reached, but market suddenly moved up to 81,000. But thankfully, it has come down to 77. Don't worry about the existing SIP. Let it continue. Let it accumulate all the units that is required right now. For the lump sum investment, if you have invested in hybrid or asset allocation, don't worry about that. They are already been adjusted. For lump sum kind of thing, if you have invested in equities, uh, and I hope that if you're investing in equity, you have 3 to 5 years duration in mind. If you have 3 to 5 years duration in mind, don't worry about it. Okay, the numbers clearly show that market will go up from here. This is a short-term adjustment of the valuations and global factors that resulted in this kind of scenario. Moving on, couple of data point which already I've showed you earlier also. This is the domestic performances. I just quickly move through global index. Okay, so that's what I just quickly move through, and world economy totals and hurdle. I already mentioned all those factors, parameters, so no point of repeating this thing. So that's all. This is 151 years of S&P 500 returns. Okay, so that's an interesting data point. Parameter S&P 500 done 1874 to 2024 data point. Okay, so it clearly shows that how many time it has given minus return and plus return and kind of thing. Okay, and it clearly says that market is not linear. It will have its own range, and that's why it's showing that in 2025 it expected to have between 10 to 20% return kind of thing expectation. So that's all from my side today. Thank you all for attending today's sessions. I hope you get a clarity about where the market is, where the market will head it towards, and see you up next month in the same time, probably second week of every month, Saturday at 4 p.m. we take the sessions. And thank you for attending. And one interesting point